Hi everyone, welcome to Awais Surahyo Show, episode number 3. Today we got a special topic, and why I'm saying that, once I was looking into it and looking at a lot of videos, I found people are sharing this in a lot of small bits and pieces. My goal is to definitely, let's look into it in detail because this is a very beneficial topic. Before I do that, please watch it till the end. Do not forget to like, subscribe. So what are we doing today? 3 steps we will be taking today. Number 1, how would the podcast help? Number 2, why did I choose this topic? And number 3, 10 eye-opening options just for you. So number 1, how would the podcast help? I started this journey recently to do a video podcast. The main goal is here to bring knowledge and benefit to everyone, including individuals and businesses. To stay a little different, my goal is to bring a lot of relevant and effective topics that are happening in our daily lives, happened recently. At the same time, adding a fun or different flavor from time to time. So number 2, why did I choose this topic? In the last few years, especially after COVID, as we have seen, their inflation has been very high. At the same time, higher interest rates, which we have not seen in the last few decades. Not only Canadians, but people all around the world are seeing this complex and rapidly changing economic environment with increased cost of living and financial stress in their households. A smaller percentage are experiencing exceptional circumstances. Example of exceptional circumstances are high household debt, higher interest rates, increased cost of living. What do we do? The journey I just want to start today to come up with mortgage relief options. When I talk to people, I share, let's say, skip a payment, a lot of people's eyebrows go up. And that's why I just wanted to today share these options. Of course, there's a lot of options, but I've trimmed it down into 10 possible options that you can look into and can help you a lot in your situation. Especially, a lot of us are going through this financial stress related to the biggest investment of our life, mortgage. Number 3, mortgage relief options. As I said, I've trimmed it down to 10 options to benefit you. The objective is, number 1, there are options or solutions out there that can help you. So I just wanted to create that awareness. Number 2, I feel sometimes with all these situations we get stressed and we do not do anything. So my important goal or objective, as I said, is today that please do not sit on side, find solution and take benefit of options available with your lender or bank and take benefit. As a result, now 10 options. Number 1, we are going to mortgage payment deferral. As it says, it is a temporary relief option. What does it do? It defers your payment and interest for a certain time. And then once that time is over, let's say it's 2 weeks or 1 month, your principal and interest payment continues. You will need to repay the mortgage payment you missed in the future. What does that do? The defer payments let you defer the payment. However, interests do not accrue. Number 2, because you deferred the payment, the principal and interest payment, the amortization gets longer. Because it gets longer, your mortgage will finish in a longer period, which is okay. At this time, you needed this option to help you, let's say, for a month or 2, depending on your institution. At this time, you get that ease. However, amortization has now increased, so you will make extra payments at the end. So number 2, partial payment deferral option. This allows you to do only interest-only payments based on the institution on your mortgage payment for a specific or short period of time. This may be only offered if you have increased your amortization option or you have used capitalization option. Capitalization means your financial institutions allows you to add late payments to your mortgage principal. Once again, as you are paying interest-only payments, your principal balance does not decrease. This causes your amortization period to increase temporarily and then the payments you have not paid will be added again at the end of the amortization. Most importantly, nobody wants to pay interest-only options. Everybody wants to pay principal and interest so that you can build on it and pay your principal over time and finish your mortgage. So please look at this option carefully, understand it, and take benefit accordingly. Number 3, extension of amortization. As it says in the words, you will extend your amortization, which will benefit you, lower your mortgage payments, which is principal and interest payment. So extending it, the length of time to pay mortgage will be longer. Should you wish to bring it back, there are a few things you can do. You can increase your regular payments, and then that will benefit you to bring amortization lower or back to where it was. Or you can make some lump sum payments, which will benefit you at the same time bringing the amortization back. You will pay more interest over the life of your mortgage if you extend it. However, these couple of options should help you bring it amortization back in the future if you are capable of doing it. Number 4, skip a payment. Once every 12 months, you have an option to skip a payment, which is principal and interest, provided that you are on top of your mortgage, your payments are not in arrears. So there are certain conditions that bank will ask you before you can do skip a payment. It depends on institution to institution, and it differs. Some allow you to do 4 consecutive weekly payments. Some do 2 bi-weekly. Some do 2 semi-monthly. And certain institutions I saw even give you more than a month. So it might be 3 months or 4 months skip a payment, which is amazing. Please remember, meanwhile you are skipping a payment, you are still making your insurance or property tax payments. They will still be continuing. There's no fee for this option. However, your payments won't change once the skip a payment option ends. They continue. Instead, the interest payment accrued during the skip payments will be added back to your principal, and the monthly payments will resume after recalculation at the end of skip a payment. It is very common option outside of United States, especially in Canada and some Asian countries. So please look for it. It's a great option, especially in these times when people are having little strain on their pocket. Skip a payment is a great option. Number 5, special arrangement done on payments. So special payment arrangements. There are times institutions will offer you a unique proposal. They might give you a special payment arrangement option to benefit. Special payment arrangement, I can give example. Let's say you are late on payments. They might give you a benefit of doubt to make those payments in the future. And this option may help you if you are late in making your mortgage payments. This recovers in terms of financial institutions over the shortest period of time and helps you with your financial ability. So that sum it up, check with your institutions if they have any special payment arrangement options. It may not be just for late payments, it may be others, but that is one option you can look at. Number 6, prepayment or re-borrowing. Sometimes they call it refinancing. Let's start with prepayment. The prepayment option on your mortgage gives you flexibility to make extra payments in advance. Moreover, you can do it in 3 ways. Number 1, you can make extra payments on your mortgage by increasing your payment. You can do extra lump sum payments on your mortgage. You can pay your mortgage in full with or without penalty. Number 1, increasing your payments. Most of the institutions have flexibility in their mortgage. It's an embed option that you can increase somewhere from 5 to 20% your principal and interest payment either once a year or twice a year during the 12-month period. For example, you are making a $1,000 payment and you have option of, let's say, 10%. They will take 1,000, increase it by 10%. It'll become 1,100, and now you can continue doing your 1,100 payment, which benefited you paying more towards your mortgage. So that is how you increase your payment and make extra payments. Number 2, lump sum payments. Similarly, for increasing your payments, bank institutions also give you this option available in your mortgage, which from somewhere from 5 to 20%, you can make lump sum payment. But this 5 to 20% depends on your original principal amount. So let's say if you took $1 million mortgage, based on that principal amount, they can give you 20%, which on 1 million will be 200,000. Now during the year, you can make up to 200,000 lump sum payment on your mortgage without any penalty, which is an amazing option. Sometimes you might have 10% or 15%, and you do not have to make the whole, in this example, 200,000. You can make 10,000, you can make 50,000 depending on how much money you have available. Number 3, you can pay your mortgage in full with or without penalty. When you make a lump sum payment to pay the mortgage in full, if you are in a fixed term, and fixed means you have a term that has a fixed rate, which doesn't change the whole term, doesn't matter it's 3, 4, 5 year, usually the penalty is high. And usually you cannot make any payment other than the first 2 options I gave you, increasing your payment or lump sum. So if you do the full payment other than, let's say you have 10% option to make a lump sum, it will create a penalty. So you have to check with your institution or bank to understand, can I pay the whole mortgage in full because I have money and I just want to pay it, or you can pay without a penalty. How you do it? At certain stages you can do the full payment towards the mortgage. For example, renewal option. Once your renewal comes, you can pay your mortgage in full without any penalty. So this is the prepayment option. You have 3 options. There might be others, but these are some options that you can look into to make some prepayments on your mortgage. Part 2, as we were talking about prepayments, second part was reborrowing. When you refinance your mortgage, you are not redoing it. You are just replacing with your mortgage with current mortgage to a new mortgage. You could refinance with your current lender, or you can move to a new lender. Once again, depending on this option, you have to do your own research, see what is beneficial for you, and then choose the lender accordingly. How does the refinancing work? The refinancing is in a similar manner like you did the mortgage application in the initial stage. Of course, it is more easier than before. However, you start the process with the lender. They will take your application. They will do your credit check. They will take all the documentation needed and approve you for the refinance. Of course, the underwriting process has to go on. They may have to do appraisal, so please be cautious. They might charge you appraisal fees, so do look into that. The process generally takes somewhere from 15 to 25 days. Sometimes it may be a bit longer. There can be different kind of refinance options. So please check with your lender and see what options are available and how it benefits you based on your situation, and then look into it accordingly. Number 7 and 8, we have blend and extend mortgage and then blend to term. So let's start with blend and extend mortgage. When blended mortgage, it's alternative to the previous option I discussed, refinance. You can blend your mortgage rate with new mortgage without any penalties. So what do they do? When you have a current mortgage and the rates are lower than your current mortgage, you can take benefit of it. For example, if your rate is 4%, but the mortgage rates are now at 2%, they will blend the rate 4 and 2, and you might end up with, let's say, 3% or 3.2. So you benefited on the blended rate, plus they can at the same time change your mortgage or sort of refi it and benefit you without any penalties. And this is called, you blend the rate and extend the mortgage. Meanwhile, the current rates, if your current rates are higher and you do blend and extend, it may not benefit. Again, look at reverse of it. If your rate is 2% and market rates are at 4%, If you blend it, your rate will be higher. So it's always beneficial when you blend and extend in a situation where your rate is higher and now the market rates are lower. This is an amazing option to look at with your bank. The other part, as I discussed, was blend to term. In a similar way, you are still blending your old mortgage rate with a new mortgage rate. However, you are not changing your mortgage. Your term is still continuous. So for example, if you have 4% rate and current rates are 2%, you will blend the rate. So institution will help you, and again, it might end up at 3% or 3.2. You will get a new rate. However, let's say you were in a 5-year term and you are currently at 2.5 years, your term will continue and you will finish it to 5 years. This term will not change. You're only doing blend rate, you're blending your rate to the term. I hope this clears it out. Number 9 is capitalization. I touched on it a little bit earlier in one of the options. Your financial institution lets you add your late payments to your principal. Now, this is a typical option. Not every bank has it, but it'll be better to learn about it from the professional, because current situation where interest rates are high, a lot of people are having difficulty making their payments. At this point, this might be some option. If you are late on your payments, go to your institution or bank you are with and ask them, do you have something like capitalization? How can I benefit it? I think it'll benefit you a lot. Number 10, the most and effective option, selling your home. I know a lot of times we do not want to sell our home. However, once again, I'm giving you all these 10 options just for you to have solutions available. During this time, we are meeting clients who are able to get these options, and they can improvise and they can benefit in the next few months and get back on track. However, some people are not able to do it. Selling your home might be the best option. Sometimes you have a huge home which is not a requirement. You can sell it and downsize it a bit, which benefits you pay off your debt, number 1. Number 2, it can help you access the equity, so you will have extra cash flow available. It can simplify your life, and you are able to do certain things that you may not be able to do it at this time. So selling your home can be a very good option. However, as I said in the early stage of this video, reality check is very important. Look at your financial situation. Look at where you stand currently. Is it hard to make payments? Is it not? Is it very hard to make payments? There's a lot of household debt. This can be a great option to look at. Your financial institution may be able to help you. They have certain tools that can benefit you. Look at if you are facing financial difficulty, where you stand currently, and is it a good option to sell your home. So please, once again, talk to your professionals. Look at all these options. There are a lot of other options, but I think these are 10 very good options that I looked at, and I just wanted to share this with you. I hope you enjoyed the video and you understood all these options. But please, if you have any questions, please share with me underneath or DM me, direct message me. I would love to answer all these questions and help you. Once again, thank you so much for watching the video. Please do not forget to like, subscribe, and hit the bell icon. If you have enjoyed the video and it has benefited you, please share with others, because the goal is to share all these options with people we care. And if it can benefit them, even 1%, I think we have done our job. So until next time, thank you so much. Keep moving forward. Keep looking for solutions. Your friend Awais, always. Take care, and we'll see you at the next episode.